Realty income, you will see this in most video YouTubers' portfolios. I do have it in mind as well because I like the diversity of real estate products they are offering as tenants. I mean, they expand themselves from leasing tenant space to warehouse companies and also to retailers like CVS, Walgreens, Walmart, and other major players, and even movie theaters as well. Of course, the home space. So they definitely diversified in their portfolio as far as tenants that's paying them the income. And so they are a monthly dividend company that pays a dividend every month. And I would definitely be increasing my position in realty income. Let me say this as well. Realty income is a real estate investment trust or a REITs, which means they pay out a higher percentage of their dividend to the in particular investor, and which is, you have to pay a little bit more tax on that. But I do like this as a play. Procter and Gamble. I mean, what can I say about this company besides just legendary? When you go to your supermarket like Albertsons and Kroger, most of those products that's in there is Procter and Gamble. All right. And so I do like Procter and Gamble as a long-term strategic play, especially in this pandemic and even after the transition to back to a quote unquote a normal life, people will still be buying Procter and Gamble products. And so I do like Procter and Gamble personally as a long-term play. They got so many products, it's too many to name, but most people are familiar with the Pampers products when we talk about babies and newborns. And most people are familiar with Huggies, and Huggies is made by Kimberly Clark. Let's move forward. Wendy's. I do personally like Wendy's. My only fear with Wendy's is that in this recession, if you will, that they could actually be bought out by somebody bigger. That's my only fear with Wendy's. Other than that, I do like Wendy's that they have actually introduced the breakfast menu. I wish they would bring back the dollar menu. They should never got rid of the dollar menu. And as a shareholder, I may need to voice my opinion on that. But again, I would like them to bring back the dollar menu to compete with Burger King because Burger King just announced their little dollar menu. And I am very impressed with Restaurant Brand International, more so Burger King, because they are really being very innovative. I mean, you got dollar tacos, dollar hot dogs. I mean, just the way, 89-cent pancakes. I mean, Burger King has really just doing it. It's just throwing it at the wall and see if it stick, and it's sticking. And you have companies like Wendy's just, I think we want to know, do it. Don't think, do. And so they finally have done it. And now they're doing breakfast. Great. So bring back the dollar menu. All right. So if they bring back the dollar menu, continue with the breakfast, and increase some new products, then I can see Wendy's going up. You look at a company like Jack in the Box, which is publicly traded almost at $100 a share at the time of this video, which paying a dividend, by the way, and really much heavily based in California. So if Jack in the Box was to expand outside of California, you can imagine how much revenue they would generate. And so with Wendy's, who is sitting here at just $22.45 a share, there's a lot of growth opportunity there for Wendy's. And I'm looking for that growth to happen. So I'll definitely be increasing my shares to this ridiculously one share that I have to a significant stake, hoping that they're not bought out by somebody that's a lot larger. That's my only fear with Wendy's. They pay a dividend. They're a solid company. They've been around for years. They do a great job. Just bring back the dollar menu. Get your marketing right. I haven't seen no Wendy's commercial besides the breakfast. I mean, like, get me there. Make me want to come there. And so I'm looking for more marketing, dollar menu, new products, new something. I digress and move forward. Monster Beverage. I like Monster Beverage because they are a leader in the energy drink space. Their only real competition is Red Bull, which is not publicly traded. However, my only downfall, and that's a personal downfall for me, is just they don't pay a dividend. I mean, I'm a dividend and income investor, so I'm looking for that dividend. It's like, give me a reason to invest. I mean, I respect what you do for a brand, but I need another reason. And so again, besides if they come out with some new products, that'd be nice. Maybe a little bit more marketing to let me know you're still around. That will help. Pay a dividend. Oh yeah, now you got my attention. That would really be nice. But I digress and say, yeah, I do like Monster Beverage. I do like the fact that they position themselves in a more young urban space. When I say like your as extreme sports like BMX bike, monster truck, wrestling, skateboarding, you see that Monster Beverage licensing and sponsoring there. So I like how they're getting their name out there in that young, diverse crowd. But I would like to see more products. A dividend would be nice as well. Again, for me, I do like the brand. Let me say this as well. Coca-Cola has like a 20% stake in Monster brand because Coca-Cola is really packaging their products for them. And so that's an inside tip, but we know Coca-Cola pays a dividend. Let me just dive in here and look under the hood. All right. Monster Beverage is 89.81. Roughly, you can round it up to $100. I mean, for me personally, if I'm gonna spend $100 in Monster Beverage that's not paying a dividend, I'd rather take that $100 and put it in Coca-Cola and get me 2 shares of Coke, which is paying a dividend. And I got a 20% stake in Monster Beverage through Coca-Cola. Again, it's just me. But let's move forward. Campbell Soup. I do love Campbell Soup. I mean, who doesn't? When you get sick, this is your number one brand that you would go for. I hate the soup part because Campbell has more products in their portfolio besides soup. But I digress and move forward. I mean, I think this is pretty self-explanatory that I won't waste no more time. They do pay a dividend as well, like that. British America Tobacco, their well-known brand is the Newport's brand of cigarettes. And so I do like that. I do like that they are globally, and they're bringing in that global revenue as well, along with Altria and even Philip Morris for people that have Philip Morris in their portfolios. Mondelez, everybody likes Mondelez, or well, they may not like Mondelez, but I think you like with their products, is what I'm trying to say. So Oreos, Chips Ahoy, which was really owned by Nabisco, it's now Mondelez. So Mondelez has the Oreos, Nabiscos, and all those particular favorite snacks. They even have the confectionery candies that you love as well. So that's pretty much under the Mondelez. Mondelez does pay a dividend. I definitely like this. Of course, I like Oreos and all the other particular brands. I do like the candies. I mean, all right. And so I like this going forward here. I mean, as again, in this pandemic, when everybody's at home, they want their comfort foods, and Oreos and all those snack foods are definitely comfort food, which is brought to you by Mondelez. And so I definitely appreciate that, Mondelez, along with that dividend that you're kicking in as well. Let's move forward. Advanced Auto Parts. Out of the three, AutoZone and O'Reilly's, I like the I like this one better because AutoZone is sitting at almost $1,000 a share. O'Reilly's at almost 400, I believe, and then you have Advanced Auto Parts sitting here at 160 a share, and this is the only one that's actually paying a dividend as well. And so I do like Advanced Auto Parts, and again, that's just my personal feeling about that, and I will be adding more. Keurig Dr. Pepper. Well, I like Dr. Pepper, and I like the Keurig coffee maker, so I like that diversification of catering to the coffee consumer and enthusiast, and also the soda enthusiast as we pertains to Dr. Pepper products, which is Dr. Pepper, Hawaiian Punch, 7-Up, etc. So a lot of people focus on Coca-Cola and Pepsi, and they sleep on Keurig Dr. Pepper, but Dr. Pepper has a lot of products in their portfolio that are well famous and well known. So I do like Keurig Dr. Pepper, and we'll be adding more. I do like the marketing with Dr. Pepper, with that Fansville marketing, heavily marketing in the college football space, really catering to a young crowd. Just awesome, awesome marketing. Dividend kicked in, great, love it, and it's still cheap. I mean, it's come on, we're talking about $31.88 here. I mean, this is a steal, really. I mean, it's cheaper than Coca, and they're paying a dividend. I mean, you get almost 3 shares when we compare it to Monster Beverage, and Monster Beverage is not even paying a dividend. I digress and move forward. Activision Blizzard. When we talk about video games, this is that video game. Great news. They're paying a dividend. I'm a dividend investor. I love dividends. I love a video game company. The video game company is on par to bring in billions, not millions, billions going forward. When I was playing video games, Mortal Kombat and Street Fighter, I couldn't imagine this. I couldn't imagine a platform like Twitch where we just sit around and just watch other people play video games back when Killer Instinct was in the arcade. I couldn't imagine that. But I am an investor in video games. So yes, I do have this in the portfolio and we'll add more because I understand that video games is here to stay and it's only going to get better. And when I talk about this, I have to talk about Roblox, that IPO that's coming out soon. You know, I got to add that. And even then, I'm getting excited. Unity, the software maker that just came out as an IPO. I looked at it and now it's almost $160 some a share. It's killing me. So I do like Activision Blizzard in the portfolio. Jam Smuckers. Everybody know they're jelly products, but they don't understand that they have coffee products in their portfolio. They have pet food in their portfolio. I'm smiling. I'm happy because they pay a dividend and they're generating more revenue slinging pet food than they are slinging jelly. So I do like Smuckers. It's crazy. Microsoft. I mean, I'm not going to even spend no time right here. You know, Microsoft is a legendary company. It's paying a dividend. What more do I need to say? They have so many government defense contracts. They're really going to have to explain that data breach that happened. But again, come on. I mean, Microsoft, not only they have their own Windows products, the cloud storage, everybody's going to the cloud. Microsoft have a couple of government contracts. And need I say the Xbox Series X? Okay, I'm done talking here. Yes, I do have Microsoft in the portfolio. We'll be adding more. I do like Microsoft as a long-term play, and I like the dividend as well. Apple, again, another legendary company. I'm not an Apple fan. I don't have an iPhone or iWatch. No. I'm just a pure investor who's investing in the company, trying to get that revenue and dividend back. That's it. Strategically, I like Apple going long term. I do like the stock split as far as the share that you can gain now. And so, yes, I am a fan of Apple, and I do like the products that I'm not really a buyer of the products, but I do like how they are reinventing themselves. And if they were to come out with this Apple car and really take it serious, that would be monumental. I mean, can you imagine tapping your Apple iPhone with your digital key to unlock your Apple car, and then you starting it with your Apple Watch? That's amazing. And that would really, really put a little on Tesla. I mean, Tesla had to step their game up. This is that stock. You really don't want to wake up the sleeping bear here, because if you really tick Apple, if you really get them going, they could be that surprise player that would dominate the young generation of young people that's driving out here for autonomous cars and electric vehicles. You do not want to really get Apple in this. You really don't. They have the money and they have really that desire and the technological advance to really do it. That would be amazing to have my iPhone, tap my digital key, start my car, my watch. Oh man. All right, cool. Definitely got Apple in there. All right. And we'll be adding more. Clorox. I think it's self-explanatory when we talk about Clorox. I think a lot of people sum it up with bleach, even though Clorox has a well-diversified portfolio of slinging Choco, trash bags, and others. And so I do like Clorox as a play going forward, not only since we are disinfecting our homes for COVID-19, but also going forward as far as a dividend play, and also, again, for their diversified portfolio. I just like it as a strong play going forward.